Every once in a while, a financing program comes along that completely rewrites the rules. For multifamily investors in Canada, that program is CMHC MLI Select. 95% financing, 50-year amortization, and low insured rates that have fueled a boom across Alberta. But here's what most people don't realize. Every golden era ends.
The Canadian economy, already contending with inflation, tariffs, and a cost of living crisis, is also watching a steady and ongoing slump in the housing market.
Something is shifting in Canada's housing market. It's not the kind to shrug off or forget, but cracks spreading wider every single day.
Forgive me if I'm a bit skeptical of the housing minister who increased the price of housing by 179% in just 8 years in Vancouver. He says we need affordable housing. Great. But then he turns around and says that home prices shouldn't go down. Both of these things cannot be true. So which one is it?
The rates were going to come down, and it looks like they're going to come down some more. Probably going to cut at the end of the month here in October. And we're probably going to get a couple more cuts.
And the signs are already showing that this one might be closing faster than anyone expected. So let's talk about it. Is CMHC tightening MLI Select in 2026? Because if they are, 2025 could be your last chance to lock in the numbers we've all been enjoying. Right now, MLI Select is fueling Alberta's biggest multifamily construction wave in decades. Developers who used to flip condos, they're building rentals instead, because the math just works. You've got up to 95% loan to cost, 50-year amortization, and below prime insured rates. It's the perfect trifecta. Investors are making stronger returns, and Ottawa is hitting its rental supply targets. But when the numbers look this good, programs like this don't stay untouched forever. The first crack already appeared, and barely anyone noticed. In July 2025, CMHC quietly doubled its multi-unit insurance premiums. That's the first major increase since MLI Select launched, and it changed everything. Developers sitting right on the 110 debt service coverage ratio line and suddenly fell below qualification. That wasn't random. That was CMHC testing the brakes. The tightening has already begun, and that was just the first domino. So why do I think there's more to come? 3 big reasons, and each one is flashing red right now. First, insurance exposure. CMHC's multifamily loan book is ballooning faster than anyone expected. Second, regional imbalance. Too much lending concentration in Alberta and Saskatchewan, where DSCR margins are thinner. And third, equity risk. Some deals are closing with less than 5% true equity in the project. Put all that together, then add the political pressure to control investor leverage, and it's almost guaranteed we'll see new restrictions roll out in 2026. If CMHC moves again, it won't be dramatic, but it will be decisive. We're likely talking about smaller tweaks that have a big impact. Dropping loan to cost from 95% to 90%, cutting amortization from 50 years to 40, or tightening the scoring model, forcing developers to earn more points from affordability or energy efficiency. Sounds minor, right? But even a 1 to 2% swing in returns can make or break a project. And when lenders start second-guessing underwriting, that's when the window really starts to close. So here's the play. Move now, while you can still lock in the current rules. Most projects submitted in 2025 will be grandfathered in, meaning you can still get 95% LTV, 50-year amortization, and full eligibility. Waiting for interest rates to drop might sound smart, but if CMHC changes the policy first, those lower rates won't matter. You can time the market, but you can't time government policy. This is the rare window where everything lines up. Don't wait for it to close. So, will CMHC tighten MLI Select in 2026? In my view, yes, gradually but definitely. The July 2025 premium hike was just the start. If you want to see how to structure your next MLI Select deal before the new rules hit, click the link below and book a strategy call. I'm Darren with DK Wealth and Growth. Thanks for watching, and I'll see you in the next video.